Hi, this is Trading Bitcoin with your co-hosts Thor and Leah Wald. I am here with Tone, and we also have Tyler on today, Tyler Jenks, and they are going to be talking about not only Bitcoin, of course, but Bitcoin's big daddy, GBTC. So I will jump right in. Tyler, how are you doing?
I'm doing great today. Bitcoin's doing great today. So we're going to have to comment on that in just a little bit. But we are going to talk about GBTC, and this will be fun.
Yeah,
Bitcoin Investment Trust. Tone.
yeah. I would refer to it more like a redheaded stepchild than than the daddy as far as that as far as wording is concerned. But yeah, it should be a good show. We'll take a look at the price of Bitcoin. I was doing GBTC research since our morning show ended. So I didn't even realize we popped until actually. Is that your fire
Hey,
alarm?
that's a smoke alarm.
Oh
Bye.
boy. All right. Oh boy. I hope everything goes okay with Leah. Um, let's all right, what do we do? We go on with the show? Her house could be like on fire, and she can't exactly walk. She only has one good leg at the moment.
Right. Yeah, why don't we just go ahead? You were talking about GBTC, and then when she can rejoin us, that would be great.
Yeah, let's keep an eye on our messages. Make sure her house isn't like burning down. But it is pouring rain both in DC and in New York. Though at the moment it might have stopped. So hopefully that would help out. Okay, so screen share. Let's go right into it. Okay, my website, as you guys know, Learn Trading. We're going to be talking a lot about trading. Please, all of the information about being a trader is free and available. I spent a lot of time talking about the sequential system. That's time analysis, and that's section 6. I will be doing 3 more workshops in the continent, in North America, Boston, Vegas, and Chicago in August. And after that, I will not be in North America until January. Also, if you just want to use the indicator and you don't want to write your own code, or you don't want to use the free version, please check out the indicator section of the website. And if you like ththese videos and would like to support more of this work, please use the affiliate codes if you're going to use any of these products. TorGuard will save you 50%. BitMax will save you 10%, and so on. TradingView, unfortunately, won't save you anything, but please use my discount code anyway, or affiliate code, I should say. Okay. All right, let's talk about the price. By the way, Ugly Old Goat just published another article just before, like maybe 10 minutes ago or something. And I just read it. Now, he was bullish in this area here, and he explained why he was bullish, and it looks like he had a very good trade. So, yeah, you guys may want to pay attention to his Medium posts. Okay, the monthly chart only updates daily. Okay, so here is the weekly chart. This morning, we were at the bottom of the triangle. Today, we broke out. So what can we say? So there's 2 things here, right? So first of all, there is the sequential count that I like to use. And a lot of the people, my consulting clients, my former workshop attendees, even Ugly Old Goat was trading this 9 to the upside. I was more skeptical of this 9 than others. So this shows you that there is 2 sides to being a trader. One, having good trading signals, and 2, reading those signals. Even with me and my expertise at the sequential system, as I explained on this show with you, Tyler, that when you have a rebound that started a couple of candles early, and the 9 itself was Oh, wait, do I have to?
Lee is back in.
Yeah, but do I have to actually get her back in? I do. Okay, hold on.
There we go.
Hello, what happened?
Actually, lightning and thunder hit the house so badly that it set off the alarms.
Oh, wow.
Lightning hit the house?
Yeah, so hard that it set off the alarms. And Tone, I heard what you said. Do I actually have to let her back in? Okay.
Well, no, it wasn't. No, it wasn't.
Yeah, I guess you don't have to.
No. I didn't know. I didn't know if you like left the thing or just turned off your camera. Like I didn't know because it's anyway. You know what I mean.
It's okay. Yeah, Lightning Network set it off. All right, keep going.
You know what I mean. Okay, so let's go back to screen share here, and Thor is back in his chair as well.
Oh yeah, he didn't care.
Yeah, he's handling all that loud thunder pretty well.
He has the honey badger in him much more than I do these days.
Okay, so basically, this very useful and very powerful indicator could be traded differently by different people. I was more skeptical of this 9, that it could lead to a sustained, dead cat bounce or a strong dead cat bounce. Other people that also understand this indicator disagreed, like Ugly Old Goat and some of the people in, my group chat of former clients. And some of these people traded this 9 to the upside, and they timed it pretty well with, lower level time frames, and they did well. Now, what have I been saying over the last few weeks? It is very possible for the price of Bitcoin to move into the death cross, setting up a high probability short trade. And that is actually what, at this point, is the most likely outcome. We have talked about this outcome since we started rebounding off of 5,800, the possibility of moving into the death cross. Now, this is not something that I would have said is likely to happen, but even if it happens, you're still in a bear market. Nothing has changed. It will take a lot more than one good week to get you out of a bear market. Now, as far as trading is concerned, I would have had trouble trading this particular pattern to a 9. And normally, if I'm going to time a dead cat bounce off a 9 for a 1 to 4 candle reversal, I want it to be on a 9 that looks more like the 7 candle, not the one that looks more like the 9 candle. And so for me, this is just a missed trade. If I was trading this to the upside, if we look back at 2014 and what happened in 2014, we've had big rebounds before. Now, again, remember, in 2014, the 30 versus 50 death cross did not take place till August 25th. And right now we're on July 17th. So we're still a bit ahead of schedule in this downturn. We also had this big rebound from 275 all the way to 460. That's a pretty good bounce. It's not 100% bounce, but it's a good, 60, 70% bounce. And that still led to the new lows. So I am not going crazy here. To me, this is still a bear market, and it's just a really good day and a really good week. I'm sure a lot of short positions got liquidated. In 2 weeks, this thing should start to cross and maybe we'll be inside the death cross. Can this lead to, 60,000 as someone just tweeted at me right before I went live? It's possible. It's unlikely, but it's possible. Would I become a bull in this market at some point between tomorrow and 60,000? Yeah, I have a feeling that I will become a bull at some point during that stretch. So we'll see where that is. And I will let the price and the charts guide me. Here is the daily chart. once again, if you are a trader of the sequential system, as of the current candle, you did have a green 2 trade above a green 1. Granted, the 1 was an expanded range candle. It would have been, ballsy to go in. Also, you could say the head and shoulders is complete. Here's your left shoulder. Here's your head. Here's your right shoulder, the inverse head and shoulders, of course. The neckline is at 6,800. And what is the difference between the neckline and the low? That's about 800 plus 200. That's about $1,000. So the head and shoulders is telling you that a $1,000 pop is reasonable based on the head and shoulders target. So 1,000 from 6,800, it gets you to 7,800 or 8,000, not far from the vicinity of the death cross that's coming on a weekly chart. The 12-hour chart will look the same. We have broken several levels of resistance, and this has already played out. We have broken past the setup trend line resistance. We are on candle number 8. So the 12-hour chart, like I said this morning, the 12-hour chart was calling for a short-term top within the next 24 hours. And but hey, 24 hours in Bitcoin could be thousands of dollars of a move. And there you go. So I don't really care to go into lower level timeframes. Oh, the 4-hour chart gave you a 9, right? So those that were trading the CMF is pretty significant. So those that are trading, here's your 9, probably should have taken profit somewhere on this candle. And now you wait. If you can consolidate at the top, form a little bull pennant flag, and then you can jump one more time to 7,800 or 8,000 based on that. I mean, I would love for this thing to go to 82, 8,300 into the depth cross. I'm definitely going to cash some more out to pay some more bills. Maybe prepay some of my expenses for the rest of the year, like web development and stuff like that. I'll definitely be happy paying for my venues in August for my workshops at an $8,300 Bitcoin price. Okay, so 2 things I want to say. Actually, Tyler, your views on the price, and then I want to pull up a really cool graphic.
Yeah. On the price, I certainly missed the 5% plus upside move. I am keeping my short-term negative, however. I believe the next 5% move from this level is going to be down, so I'm not even going to take it neutral. And it doesn't change anything on my intermediate or long-term, which have stayed the same for 6 months. Some people are getting it wrong again about I must be losing a lot of money because I'm short Bitcoin. I have never shorted Bitcoin. I am not short Bitcoin. I will never short Bitcoin, even though I believe I'm going to be able to buy it down around $1,000. And I know I'm going to be able to buy it somewhere south of $5,000. And we'll just have to wait for that to happen. Other than that, I'm in cash and have been in cash for 6 months in the crypto world. And if I ride this all the way up to 16 or 17,000, then I would have lost a little bit of an opportunity to buy it lower than I sold it out. So I am looking at this as a long-term play. It was a long-term play to the upside, and I was bullish all the way up to the peak. I did not catch the peak, but I caught within about a week or a week and a half of the peak, cashed out, and have been out ever since, except for one small pop around the same time that Tone was talking about, where there was a, looks like we were going to break above the $11,000 to $12,000 level, and then it gave it all back. And we took a quarter of a position of a 10% position for clients, or 2.5%. at that point, and we got out about even on that trade. Other than that, we have been bearish, but that does not mean we're short. Bearish to me in Bitcoin means being in cash. And cash over this last 6 months has not lost any value whatsoever. It is my favorite of all asset classes during bear markets. Bear markets in the stock market, in the gold market. I told everybody today that I am now completely out of gold. We trimmed back positions from 15% to 10%, 10% down to 5%. And as of today, we're at 0. But rather than sitting on cash, I found a better asset to get into. And it wasn't Bitcoin, it was the US stock market. So I went directly from the precious metals market, my last 5 to 10% of asset allocation, and that went right into the stock market. So overall, I've got no money in cash right now. The money that would have gone into Bitcoin or GBTC, which we'll talk about in just a second, is in the stock market right now. So 100% invested in other asset classes, waiting for other asset classes to come along and look better. And right now, this one that we're looking at does not look better to me.
Yeah. Hey, Tyler. So interesting you mentioned gold. So someone sent me a message. So I was corrected on the inflation. So in 1980, gold hit about an $800 peak. Some say that it traded at like 900.
Yeah, I saw it at 880. I was watching it very closely.
Okay, let's do 880.
That was intraday.
Right. You saw it at 880. That was January 1980. Whoa, 1950. January 1980. So I remember when I said, hey, so inflation since 1980 might be reasonable for 1,044 to be back a few years ago. I think that was when did we bottom? I think that was 2015 or something. The bottom.
The 1100 bottom?
The $1,100 bottom, yeah.
Yeah.
That was November 2015, let's say.
Right.
Right. So remember how I thought, yeah, with inflation, maybe that 1,050 is reasonable. You want to take a guess at what would by government statistics, what would $880 be in November 2015?
I would guess about $2,240.
Damn, that's good. That's very close.
That's because I listened to your earlier show.
That 2680. Jesus. So what is that today? So right now in June, did I have July yet, you think? July 2017? They may not have July yet.
Yeah, they do. 2760.
2770, right? So I mean, look how like gold is so far below the inflation adjusted peak of 1980 is insane.
Absolutely, but
that was a bubble, right? That really was a bubble.
Well, it was a bubble, and what's important about this statistic, even though it's fascinating because it's not just gold, it shows you what happens with inflation for everything, the price of pharmaceuticals and education and healthcare and everything. That's not because they're going up in price. It's because the dollars we pay for that stuff is dropping because of inflation. But on gold specifically, gold ran from $265 to $1,900. So it depends on, from what point you look at. Gold fell from $880 down to $200. It took it a quarter of a century to drop that far. And while it was dropping, inflation was going up. So if you looked at it from the bottom at 265 till today.
Well, it fell to 265 in 1985, the 1985 bottom, right?
Well, I would take the next bottom. No, yeah, the one in 2000.
Oh, I did. But yeah, in 1999, looks like it bottomed at around 240, right? But it also went down into the 200s, right?
Yep.
285 in 1985.
Yeah.
So if we do 285 in 1985, so if you had bought the very bottom in gold after the crash from 800, would you be up today based on inflation? Yeah, you actually would. So inflation, that's 661, and the price right now is about 1200. So you're about double the inflation rate if you cherry pick the low in the 80s.
Right. Right.
So it's a 2x move.
Yeah,
Not a great investment. The S&P did infinitely better.
Tyler.
It did, but it didn't from the bottom in 2000. Because from 2000 to today, it did the same move of 265 up to.
You know what? Maybe today. I mean, the last time I did that calculation was like a year ago, and it wasn't. But now that gold has fallen some and the S&P went up some,
yeah,
it might. Leah, you have something?
Yeah, to you, Ty. So a couple people in the live chat are wondering why you guys are talking about gold, which is a funny question. But Tyler, can you explain the importance of talking about gold in relationship of this show, talking about Bitcoin?
Well, very simply, and believe me, this is not a science. This is my intuition about what is going on in the crypto world with Bitcoin. I believe that a lot of the excitement and a lot of what we've seen in the last 10 years is because of what happened the 4 years before that. And I know for sure that it happened from 2000 until 2010, because so many people lost so much money because of the incompetence of legislatures and central banks around the world printing fiat money, causing bubbles, and those bubbles then burst. So not all of it, but philosophically, I know for a fact that many, many people in this space, meaning the crypto space, are very concerned about the macroeconomic picture and have been for some time. And those are many of the same people that believe that gold was going to keep going up and up and up and up because of the problems of fiat money. And they turned out to be wrong about gold. But to me, that was mainly because of the boom in the economy from 1979, when gold peaked, all the way till today. We have had a booming economy. We've had the strongest stock markets in US history. Now, yeah, there have been flat periods and recessions and other things, but overall, the growth rate has been spectacular, and there's no reason then to have to worry about things like gold, and gold got punished for 25 years. Then comes along this new asset class that purports to be even better than gold. Technologically, logistically, privately, a lot of qualities that are even better than gold. And it has been outperforming gold. That is, Bitcoin has been outperforming gold. But gold is a possible solution for the non-crypto crowd, meaning the average economist, the average central banker. Bitcoin is not. Bitcoin is a solution for a tiny, tiny percentage of investors. That percentage is growing, and someday might catch up with gold in terms of worldwide acceptance as a replacement for cryptocurrency. But until that occurs at some distant future, gold is going to be a very interesting asset class relative to stocks and the US dollar, not relative to Bitcoin, but relative to stocks in the US dollar. So I see Bitcoin and gold running in parallel in general for a long time. And the fact that Bitcoin has broken down 6 months ago, but gold, as recently as 60 days ago, was still flirting with going to all-time highs on this move, and only recently broke down, I find very interesting. That again, they are running in parallel, where they were both going up together, they're now both going down together. And the US economy and the stock market and the dollar are all doing the opposite.
Thanks, Ty. All right. Well, let's move to GBTC and see if they are also correlated. Yes, Tone.
Almost. I wanna read this quote because it was fitting. Somebody, like one of my friends, actually sent it to me in regards to a different market, not Bitcoin. We were talking regular trading, and I don't want to read it for the audio podcast, and then we can move on to GBTC, because and this is why Tyler and I remain bearish Bitcoin for maybe even the rest of the year. We'll see. And here it goes. It's from a book called Winning on Wall Street on page 124. Since those days, I absolutely and utterly refuse to fight a major trend in the market. I'll simply move with the tape, and even if it means being whipsawed every now and then. As a result, I have not missed a major move since that time. Mind you, I'm not bragging because I know I'm going to be wrong at times, but by following the tape, I know I will not blow a major move. So I've been there before, and I've learned from my lessons the value of staying in gear with the tape. By contrast, I guess he's talking about a specific person. Sam, probably, and probably millions of other investors had made those mistakes more than once and yet continue to fall into the same trap of fighting the trend. The market just doesn't allow you that many mistakes before it brutalizes your pocketbook. Ignorance, yes, I plead ignorance for my earlier mistakes, can cause you to fight the trend the first time and perhaps the second time, but to do so a third time or a fourth or a fifth time is no longer ignorance when you have already suffered the consequences. What caused the subsequent failure is ego. When you take the attitude that you're right and the market is wrong, or that your preconceived idea must be right no matter what the tape shows, you're headed for big trouble. The market can humble any and all of us at any time. Your best protection is to stay in gear with the trend. In other words, don't fight the tape. So I thought that was a good thing to read for people, because every single day there are enough people out there that are popular. Somebody is going to be bullish and somebody is going to be bearish. And for some reason today, all over the YouTube, everyone is naming one guy that said we're going up. And then I will probably never hear from that guy again the rest of my life. So yes, you can get lucky at any moment in time, but the trend remains bearish. Is it possible the trend has changed from bearish to bullish? Maybe, but the tape will not tell us that for quite some time. Now, Tyler and I have very different approaches to this bear market. Tyler has zero position in Bitcoin. He is completely in cash. I have a large position in Bitcoin. I'm holding on to my Bitcoin. Okay. A third person might have been short the entire way down with no leverage, because if he was short with leverage, he probably would have gotten destroyed a couple of times, right? So there are multiple ways to handle the bear market as a public person talking about the bear market. Tyler and I are handling it. Our positions are very, very different. My position is counter to what I'm saying, but I have a 10-year position. I have a 20-year position. I don't care that we get a 1-year bear market. It doesn't bother me. My Bitcoin is too important to me in cold storage. Tyler is different. He's in cash. Anyway, one thought on this, Tyler, and then we're doing GBTC.
Yeah, okay, good. Marty Zweig, who made that comment that Tone just read, is one of the most brilliant traders on Wall Street, going back for many, many, many years. And I, of course, agree exactly with what Tone and Marty Zweig was saying. That's why I came up with this system that I call Consensio, which is only designed to do one thing. Tell you if you are with the trend or against it, and tell you when that trend is changing real time. And that's all it does. And I believe in it deeply. And as Zweig said, that means we will never miss a major trend. We might be a little late, we might be a little early getting out, but we will never miss it. So I am not at all worried that Bitcoin is going to go up to 12 or 14 or 15,000. I will be in that trade. I guarantee it because of Consensio. And until that happens, and we'll look at some trend analysis in just a little bit if we've got time, after this pop that we've just had. And I will demonstrate clearly that we are still in a long and intermediate term downtrend.
Yes. So someone just asked the question, do I have to wait 20 years to buy Bitcoin at 1,000? Maybe you had to wait 20 years to buy gold at the low after the 1980 peak. Yes, it's possible. Unlikely, but possible. I don't think it'll take 20 years. Can it take 2 or 3 years? Absolutely, it could.
Quick comment. People were asking what tape means, and just if I remember this one correctly from my days, tape is really the ticker tape, right?
Here's the tape right here.
Yeah,
it actually is tape. It's a piece of paper that has all the stock buys and sells on it, and that was used in the 19-teens, 20s, 30s, and 40s.
Exactly. And yes, the name of that book, it's really analogous. Oh my God, I can't say that word. To the maxim of the trend is your friend, which they've been saying. But that's hilarious, Tyler. Okay. Nice. Yes, that's a tape, guys. GBTC.
Yeah. Tape just means trend. It's another way of saying trend. Today we say trend. Back then he's saying tape. Okay, GBTC. All right. Oh man, where do I start? So here's the research that I was doing, right? So here is, and these links are in the video description. So you have to understand that GBTC has a 2% annual fee, which is an unreasonably high fee for an ETF product, like unreasonably high. I think the fee for the S&P 500 is 0.05%. Annual, 0.05%. This is 2%. So this is a 20 times larger fee to manage GBTC than the S&P 500. Now, I understand why that fee is there. If I ran GBTC, I'd probably take the same fee. Like it's a good fee, but it makes certain analysis very complicated. In addition, GBTC had, so here's an article. I needed dates. So on May 4th, GBTC launched its ETF or ETP, exchange traded product. But the actual product was launched in September of 2013. So the 2% fee per year started accumulating as of September 2013. So it's coming up on its 5th year anniversary in about 2 months. Okay. That means that in 5 years, if you held your Bitcoin at GBTC, you lost about 13% of the value of your investment for them to manage and hold that investment for you. Does everybody understand that? Like, I want to make this very clear. By keeping your money in GBTC instead of putting Bitcoin in cold storage, you lost 13% of that money. Just like the US inflation thing, 2% annual inflation. Okay. So that's 13% in 5 years you've lost, just to be clear. They also did a split. Now, when they did a split, They did a split to try and get back to round numbers. They, when GBTC launched, 10 GBTC shares equaled 1 Bitcoin. When the split was taking place, almost 11 GBTC shares equaled 1 Bitcoin. So that means when GBTC was doing its split, you had lost, it looks like 9% of its value. That's what that 0.89 is. 9% of your value was given to Barry Silbert for his work. They did the split at 91 to 1. The reason they did the split at 91 to 1 and not 101 to 1 is to try and get back to a round number ratio. The day of the split, one Bitcoin needed 1,000 GBTC shares in order to be equal 1 to 1, right? So the day of the split, 1,000 it was 1,000 GBTC shares was 1 Bitcoin. That's why that ratio was 0.001 Bitcoins in each GBTC share. Okay. Now, here's where it starts to get a little important, because these numbers, this percentage is so high, it gave me a big headache earlier today. Tyler, jump in if I say something stupid or incorrect. So where's my chart? So there's 2 charts on here. And this is the problem. I wanted a proper multiple. Right now, if you look at the GBTC site, as of, they gave you a multiple. As of right here, as of June 30th, so it's about 15 days late. As of June 30th, the multiple is 0.0099897. And I was doing a bunch of Excel work earlier today, which was actually driving me nuts because I couldn't type the numbers out. So what is this number? This is the last official number from Grayscale. Here is the last official number. Let me make it bigger. That's the last official number. So I would think it dropped a little bit since then, maybe a tiny bit. I don't know. Let's, I'm just going to guess. Actually, no, I know how much it's falling per day. It's falling about, so what do we got here? We got 1, 2, 3, 4, 5 numbers. 1, 2, 3, 4, 5 numbers. About 0.05 per day. So it's been about 14 days. So 2 weeks. So let's say 15 days. So 5 times 15 is what we got. 50 plus 25 is about 75. So I drop about 75. So let's say this is 25, right? That's the number. So now I can do a 1 over that number to get a multiple. It's only 1,001.75. That's not a big deal. So let's do that. 1,001.75. So in order for me to properly, where was I? In order for me to properly analyze the price of GBTC versus Bitcoin on a same chart, I need this number to be that. So that's 1,001.75. Okay. And the problem is that anytime I change this number, I change all of my annotations on my chart. Okay. So, and now you can start to see how much GBTC is appreciating over the price of Bitcoin as of today. And just today, the price of Bitcoin is 7.3 and GBTC is 11.5. Okay. So on this chart here, no, here, I have a ratio between the two. And it's the same thing here. I need, once I do this, once I change this number, but like these lines are going to disappear. But changing this number to 1001.75 is not going to make much of a difference. Okay. But what you have to realize is the multiple at this low is very, very different than by using this number because of the stupid 2% management fee. So it's very, very difficult to gauge this envelope of when and how often the ratio between the two approaches parity. Because, and that's what I was trying to do with this Excel spreadsheet. I have we were given a couple of numbers. So we have 4 numbers that we're working with. We know, I believe for a fact, because it was published on the day of the split, that this was your investment. So when the investment started, 0.1 one GBTC share was 0.1 Bitcoin. And that's what I did here, right there. When GBTC started its operation on the 25th of September, this is important, guys. Maybe we're waiting. Like, I can't get the math formula to tie out. So this is going to be some homework for you guys. When GBTC started trading, 1 share was 0.1 Bitcoin. Okay. So here is a very simple formula. So what was it the next day? Well, the next day, if Barry Silbert is doing daily, if he's taking that fee daily, which I believe that he should, you take the 2% annual fee, you divide it by 365 days, and we need to see the formula. Like, I don't know what's in the sheet. Like, if anyone has, detailed information on how he calculates the management fee, it would be very critical. So you take 0.2%, you take 2%, you make it 0.02, which is 2%, you divide that by 365. That's how much money you're being charged on a daily basis to manage the GBTC. You subtract that from 1 and you multiply it by the value of the prior day, which was 0.1 Bitcoin. And then you just extend this formula all the way down. So what happens when we extend this formula into the day of the split? The day of the split was the 26th of January, 2018, if my memory serves me correctly, and if Google is accurate. On that day, my math on Excel is telling me that 1 GBTC share should have had 0.091 Bitcoin in it. Okay, 0.0916863. But according to the articles published, it was supposed to have 0.0918 So it looks like if I ran the GBTC index, you would have less money. It looks like the management fee that I was able to calculate has taken slightly more of your money than Barry Silbert did. But again, I would love to know the actual formula. Now, after the formula reset, and this stuff is in the articles I referenced in the video. After the split, this is how many Bitcoins are inside a single GBTC share. Or this is how many GBTC shares you need to equal 1 Bitcoin. It's however you want to do the math, okay? So now we're starting with this number. So now I take this number, I rounded it to 0.001. I actually lowered it a little bit, okay? I rounded to 0.001. because that's the new number. That's this column on the left. And once again, we use the same formula. We get the daily compounding fee, and you subtract it. And now you go down with this formula, and it's telling me that on June 30th, the amount of Bitcoin in one GBTC share should be 99,154.00099,154. And if I go back to Grayscale, they're giving me, again, a slightly different number, 99,897. They're not, I mean, these little numbers add up. I mean, they're not that trivial, right? Like, this is the number that they're saying it is. Okay, where's June 30th? There's a reason for my madness here, right? Like, I like to get my numbers straight. So their number, actually, I can put it right here, is their number is slightly smaller, right? It's smaller. And if I do the inverse of this number, right? If I do equals 1 over that, you can see that wait, what am I missing here? I thought this would be closer to 1,000. What am I missing here? Oh, I'm sorry. My number is smaller, not theirs. My number is smaller. So now, while on the first side of things, I was taking a bigger cut based on my math, now it looks like now it looks like I'm still taking a bigger cut. Okay. So based on my math, it would be 1,008 shares, not 1,002 shares, right? Now, if hold on one second. I should have probably used the full number here. Hold on, let me grab this. I'll paste it here, and I'll grab the same color, just so that here. All these numbers would adjust. Let's get you guys a little closer to even here. Right, so you see the difference? And now we haven't even broken below 1 yet, right? So there's like a big difference here. Whether it's this or this, like rounding matters a lot. Like I used this number, 1.00893 instead of 0.001. And you can see a huge difference in the outcome. This was 108 shares of GBTC for 1 Bitcoin instead of 1,008 shares of GBTC for 1 Bitcoin, right? So, but either way, and you can extend this math now going backwards, because remember, they altered everything with the split. So now you take the same formula and you add 2% instead of taking away 2%. And you can drag it all the way up to the beginning to see what the multiple is based on today's numbers, right? You're like just going backwards. So the reason why I try to do this entire insanity is because you can't properly use a single multiple. So there's a homework assignment for you guys. Try to tie out the numbers because I can't do it. But then again, I only spent about 2 hours. So that's probably not enough time to do real research. And hopefully GBTC will give us the formula. Ty, you emailed them, right? So let's not have 1,600 people email GBTC asking them for the formula, though that would be hilarious, I think. Okay, so what I'm saying is I would love to know, I would love to use the proper multiple right here, right, for a proper date. So let's say I want to know what this bottom peak was in on the 28th of February 2017. So now if I go back to my spreadsheet and I don't know what to use, right? Because Barry Silbert is telling me that, and again, this is a big problem. Barry Silbert is telling me that on June 30th, I should have this many this many Bitcoin in one GBTC share. But no matter what numbers I use, I need to properly round this number. If I do absolutely no rounding, I should like maybe hide some of these or something. If I do absolutely no rounding and I copy and paste this number directly, clearly I have a much higher amount of Bitcoins in one GBTC share. If I drop the remainder and only use 0.001, I have a much smaller number of Bitcoin in one GBTC share on the 30th of June. So I don't really know what the correct multiple is on, what do I say, 28th of February, right? What do we use? It was 28th of February, right?
24th to the 28th. I can't remember what you said.
Yeah. So right here, the 28th of February. So on the 28th of February, right here, when we hit the low, I need to know what this multiple is. I need to know what this multiple is. Is the multiple this guy? So what I have? Equals this. Equals 1 over this. That's the multiple I'm supposed to be using for that particular day. Or my other option, actually I need that. Let's say 993. Let's round. 993. So 993 shares of GBTC equals 1 Bitcoin. Or I could use the actual, that is the actual number. But if I round, right, I'm using the actual number. But if I round to 0.001, number is very different. That number is now 101.8. So let's round, let's make that 1,002. Okay, so those are the numbers I'm supposed to be using for that date. Now let's go back. So now I need to pick a number, right? So am I using 903, 993? Or am I using the other one? Now, if I use 993, what's the low here? On the ratio.
42%.
Let me see. Well, I have the open, high, low, close, right? So on that date, the open 1.073. So it's it looks like it's between 5.5 and 5.2 and 6.7%. Okay, but if I use the other number, what was it? 1,002, right? 1,002. It is between 6.5 and 7.5%. So I understand that it's not that big a deal, right? But over time, you will not know from a technical perspective what is a good historical perfect buy point or a good historical high, because you literally have to plot this, because on every single day, the multiple is different, assuming you have the right multiple. Like, I don't even know which multiple I should be using right here, right? 1,002 or 993 in my formula, even for this one particular day. But even if you know the exact number on this particular day. And if Grayscale tells us what that formula is, we should be able to back these numbers out. You can then, but then on every single day, you literally need to make a spreadsheet, and you need to plot this spreadsheet, because on every day that number is different. Tyler, are you with me on this? Because I think I lost like 1,000 of the 1,500 current live viewers.
I think they're still there, but some of them might be asleep. It's really hard to follow the machinations of mutual fund accounting, ETF accounting, for a lot of reasons, and particularly if you're trying to use technical analysis on the results of that analysis. Because, for example, open-end mutual funds charge on average 1.3%, what's called the expense ratio. And people say, well, that means I'm going to lose 1.3% of my money. And that's not exactly right, because they take out 1/365th every day. So if you hold it for a month, you don't lose 1.3%. You lose 1.3% divided by 12. So the assumption that you buy and hold something that has an internal expense ratio presumes that you hold throughout an entire period to the end of that period. And then it is true that the performance will be better or worse by 1.3% at the end of a 12-month period. Except what that doesn't tell you is what was the performance. And one of the things that I have found over the years studying mutual fund performance is some of the very best performing mutual funds, net of all expenses, costs, and transactions, are the ones with the highest expenses, not the lowest. Why is that? Because there's someone making decisions within the fund, buying the right stocks at the right time that can beat an index or a competitor.
You guys are frozen. Is it me?
Yeah, I think it's you. Leah, can you hear me okay?
Yes, I can.
Okay, good. So that's one very important thing. In general, higher expenses are bad, lower expenses are good, but specifically, you can't draw that conclusion. Number two is...
Yeah, hey, Tyler, can I just add to that?
Yeah,
this is why good hedge funds charge 2 and 20. They charge 20% of your profit and a 2% management fee, even if they don't make you any profit. And that's
exactly.
That's an average hedge fund. A crappy hedge fund will charge you 10 and 20. Average hedge fund, 10 and 1. And an average hedge fund will charge you, a normal hedge fund will charge you 20 and 2. A good hedge fund will charge you 30 and 3. And there was like one hedge fund, I think, I actually forgot which one it is. They're charging you 40 and 4. Is it Millennium?
Renaissance.
Yeah, Millennium is one of their products. That's right. Renaissance. They charge you 40 and 4. They take 40% of the profits they make you and a 4% management fee if they make you zero money that year.
And for the last 10 years, they haven't allowed anybody to invest. It's all their own money. All their own money.
Right. You can't even get in there. Like, that's how big the waiting list is, like miles long.
Because they compounded at 34% per year, every year for 20 years. So that's the point exactly. The detail work on expenses is important, everything else being equal, but everything else is never equal. The other big thing with expenses is that they're taken out at different times. Sometimes, for example, I charge 1% per year, but that 1% is taken out 1/4% per quarter at the last day of the quarter. So let's say you start with $1 million. If you say, oh, he charges 1%, that's going to cost me $10,000 over the year. But after the end of the first quarter, if we drop down to 900,000 because the market did, it's 1/4% of 900,000. If we go up to $1.3 million in the third quarter, it's 1/4 of 1%. So it's not compounded daily, or it's not broken down daily. It's done quarterly at the asset level on that particular day. I will suspect we're going to find something like that about GBTC, once a week, once a month, once a quarter, maybe once a day.
I think it's daily because, and here's why. I tried doing this. I tried doing the math, compounding monthly, and you see it on the right. So I tried compounding monthly.
Yeah.
So again, you start with 0.1, and then your first fee is 2% divided by 12. And then you take away from that. And the day of the split, which was in January right here, if they were compounding monthly, you would have had 0.0955, but instead you only had 0.0918. And I was a lot closer to this number by using daily. Maybe they're using daily, but not weekends. Maybe they're only doing 5 days a week and not 7. Maybe they're taking Sundays off. It looks like I overshot over here, but clearly monthly way undershot. So they're compounding more often than monthly, but less often than daily. Maybe they're doing weekly.
Could be
weekly, right? So I mean, I can try to reverse engineer their compounding formula, and then I can get it right. Maybe I should have tried weekly.
Well, and just one other thing, and that is balancing off the cost with the opportunity. In this case, this is the only opportunity anybody has to put anything resembling Bitcoin into a retirement account. And the question is that worth 2% a year? Well, it certainly was in 2017, because in 2017, GBTC was up well over 1,000% for the year. So give them their 2%. So all of that's got to be taken into account, I think. And we'll try to get to the bottom of it. It's probably not going to matter much longer, only because I believe that more efficient ETFs are on the horizon. I'm not predicting it for the August SEC announcement, but that could occur. But
wait, Tyler, are you saying that GBTC might actually be taking the fee based on the underlying price of the product? That would make this math almost impossible for me anyway. I thought they were just taking 2% in general. Like, I didn't think the price of Bitcoin mattered. Oh, I know.
Well, it's 2% of the assets, and the assets are now $1.13 billion. They weren't a year ago. So if it's done daily, it's done on the assets, the money that's come in, the money that's gone out, the value of the account, which is possibly, you're awfully close though. We know you're close. Therefore, I don't think that's going to throw that off that much, particularly if you're doing it daily.
I can't close daily, but maybe it's weekly. I don't know. Maybe I'll try it weekly. I'm gonna do it off camera. No one needs to see my Excel skills.
Well,
but Leah has a question for us that we're fresh. Okay, Leah, I'm gonna go off screen share.
No,
I'm gonna.
Okay, fine. You can go off screen share. So
I'm gonna try and do some horrible. It's so hard to do weekly compounding because I have to count how many. Because I need to know how many.
Well, why don't we wait until we get the email back? I'm sure now we will hear from them now that we've talked so much about it, and then we'll have the actual formula and we can figure it out.
Mm-hmm.
So, and then I could be totally the one that's wrong, but I did want to demystify a little bit of the comments you guys are getting in the live chat, and then please tell me when I am incorrect, Ty. So this will be maybe a little bit of a back and forth on this one, but yeah, it's as to your point, my understanding is it's against the net asset value. But everybody, the question of why are we talking about this and why aren't we switching to Bitcoin? This is, I think, a very silly comment right now. But if you guys really don't understand GBTC, so Bitcoin Investment Trust, it's the only option right now for investors to trade Bitcoin on the stock market, right? So, and especially Tyler can talk about the importance. I see Tone trying to work on the spreadsheet, so I'm gonna talk a little tiny bit. And
I'm listening.
Good. But yeah, I mean, so it's the only stock that was blessed by the SEC, right? So especially in Tyler being a money management, us with Lucid, it's extraordinarily important. And so yes, it's not Bitcoin, but it holds Bitcoin as its primary asset. So why is it like extraordinarily important also for the Bitcoin world and for also Bitcoin to gain even more relevance and liquidity and importance is because everybody, the average person, can trade it in their easy Fidelity account. It's super, super easy. Not everybody has extra time to figure out the 24/7 crypto market and the exchanges and if they get hacked and be scared by that and everything. I mean, this is super, super easy. And so therefore it's kind of a trade-off that I think a lot of people are willing to be make. And also just to add to it, right? Like, yes, the premiums are really difficult. Someone asked about arbitrage. Yes, you can. It's pretty difficult, but yes, but also, right? Like it's a auditable ownership through a traditional investment vehicle. I mean, easy, right? Familiar structure for financial and tax advisors, easily transferable to beneficiaries under state laws, right, Ty? Like, you could have tax advantages, right? You know, Tyler often talks about how, and we have talked about this before in our show, that GBTC is eligible to be held in IRA, Roth IRA, other brokerage, investor accounts. So it's also very, very important if you want to put it in your retirement funds, and you very much can with a money manager. And then lastly, like it's publicly quoted, right? So it's eligible to be, you know, more again, eligible, sorry, to be held. But, you know, that's extraordinarily important to note the validity behind that. And again, the assets, my understanding is stored on Xapo Inc., XAPO Inc., which Tony, you could probably tell me later, but I did think that that was cold storage. So I guess to end is just like, you know, yeah, there's a huge premium. It's super, super confusing sometimes. And sometimes the premium works in an investor's favor. If you buy when the premium's low and wait until it's high, sometimes it can outperform Bitcoin with GBTC. But sure, if you know how to trade it, and Tyler does, and some people do, you know, it can be absolutely wonderful for now until we get better products. So why are we talking about this? Because it is very important into the Bitcoin world for institutional investors and also for people like us. You can go and have fun in your Fidelity account. So just wanted to demystify that. I could be completely wrong. While Tone has a very important look on his face while he's playing with numbers, Tyler, please tell me how wrong I am until we dive back into the minutiae.
You're exactly right. People in the crypto ecosystem have got to understand that the biggest accounts in terms of investments are retirement accounts. They're corporate retirement accounts, they're government employee retirement accounts, they're defined benefit accounts, defined contribution accounts, 401ks, 403bs, 459s, 457s. That's where there are trillions of dollars. And guess what? They are not allowed to buy crypto, any of them. There's one place you can do that, GBTC. Because it is a security, it is not considered a crypto. It's the only ETF, it's the only stock that's traded over the counter. It's been approved by the SEC as being properly registered. Now, another little hint here is guess who owns over $1 billion worth of Bitcoin? Not GBTC, but Bitcoin. GBTC does. Because when you put $1 billion into GBTC, they immediately buy Bitcoin with it. So one of the biggest owners of Bitcoin.
Well, actually, they it's a little more nuanced than that. They actually don't. When you buy GBTC, they actually don't add Bitcoin. That's why we have this unreasonable premium. When you buy the trust, not the GBTC ETF, when you buy into the trust, they buy Bitcoin. And then when the people from the trust want to exit, they sell GBTC on the market.
Exactly. That's right. But there's $1 billion,
yes.
$1.1 billion in the structure. it is a two-layered structure. You've got to be an accredited investor to be in the first layer with at least $50,000. Everybody else can just be retail in their 401ks or IRAs. But the point is that there is demand, in other words, buying pressure for Bitcoin because of GBTC. And not only that, when you overlay the two charts, guess what? They move together, minus the premium and minus the 2% fee. So anyway, I think you're exactly right, Leah. As long as it has those attributes, it's a very important thing for people in the ecosystem to understand. There's a whole lot more money in GBTC than there are in 95% of all the crypto coins.
Yep.
And
Sorry, I was on mute.
That's important.
Yeah, absolutely. Tone, we got you screen sharing.
Yeah, my weekly, I'm not sure what's going wrong with my weekly math. It's coming out to be at a slightly higher number than the monthly one, and that shouldn't be. Oh wait, January, right? 0.09559, and I have 956. So it's a slightly higher number, which makes absolutely no sense to me. So I went wrong somewhere there. But I don't know. We gotta find out how they're doing it. And the reason is, again, there's two aspects to this trading. People need to understand that here, like, I don't know what the right multiple is on this day or this day, but let's just use 1,000 just for the hell of it, right? That's the one that I had before. What you have to realize is that there's two aspects to trading GBTC. One of them is being right about the price of Bitcoin. The other one is being right about the premium of GBTC versus Bitcoin. So the price of Bitcoin could go up like, I don't know, $50, but you can make a lot of money with GBTC because look over here from March 2017 till June 2017, the premium went from being like 5% to being 150%. Okay, so you guys need to understand that. Or was it 250%? No, it was 150%.
150.
150. And so the price of Bitcoin, sure, the price of Bitcoin moved, but understanding the relationship between GBTC and Bitcoin is a different way of making money. People seem to think that the only way to make money is by properly guessing if something's going to go up or down. I trade option spreads. Read Ugly Old Goats articles. He trades basis of longer dated futures versus shorter dated futures. You don't need the price to go. You don't need to. There are ways to trade, and it's called direction neutral trading. I'm a specialist at directions neutral trading with options. I couldn't care less if the stock goes up or down. I properly enter trades based on relationships like this in GBTC. And the reason I went through that exercise is because I would love to chart out GBTC with the proper element on every single day to know exactly where my lower bound is and where my upper bound is. Also notice how for the last, I guess this entire year, it looks like the bound has been in this vicinity. So the buy level has pretty much been raised to the 40% level. That seems a little bit steep. And but it does go all the way up to the 75% level. So even if Bitcoin does nothing, you can make 20-30% by understanding the relationship between Bitcoin and GBTC, and you can hedge accordingly and take that premium. Now, this is a full-time job every single day. So everyone, I know that our trolls are going to go, if it's so easy, why don't you do this? Because I don't want to sit in front of a real broker, and B, hedging Bitcoin itself and doing that every single day. That's a job. If you want that to be a job, there is money to be made here without, with very small risk. There is always risk, but it's small risk. And the price of Bitcoin wouldn't matter to you if you're properly hedged, taking advantage of this premium. Now, this will only exist until the SEC approves a real ETF. The moment there's a real ETF, and this is the danger, the moment I would say that the premium of GBTC is probably going to slowly evaporate as August 10th comes closer. However, it's not that easy, because even if the SEC says there's going to be a Bitcoin ETF, it doesn't mean it's going to start August 11th. Like, there's going to be a decent time period. But the moment the SEC says that there is going to be a real ETF, this price premium of GBTC over Bitcoin, if you got your multiples straight, is going to get, that arbitrage is going to go away because it shouldn't exist. It only exists because GBTC isn't liquid enough. So it drives it. So there is all kinds of things you need to know. And we've had lots of questions about trying to understand GBTC. And there is lots of homework that needs to be done here, but we're trying to help. Tyler?
Sorry, I was on mute. Tyler, last thoughts?
No, I think I'm okay. No, I agree with Tone. And just so everybody knows, I do not buy Bitcoin for my clients. I buy GBTC. And I studied the premium, and we make as much money on the premium either going up or Bitcoin going up as we do on the underlying, because it is knowable. And the average is about 42% from the beginning in terms of a premium. But as Tone said, on 3 or 4 occasions, it's gotten over 100. My general rule of thumb, just so people know until the next ETF comes out, is I will buy anytime the premium is below 20, regardless of the direction of the underlying Bitcoin. If it's up or down, doesn't matter to me. If I can get the premium less than 20, and I've been able to do that on a number of occasions, and I will sell it between 60 and 70, although at various times it's gone up to 80, 90, or 100. And when it's flat, like it has been around the 40 line, 50 line, 60 line, I'm not interested in it.
Unless you have a strong conviction that the price is about to explode to the upside.
Exactly. That's the whole thing. If Bitcoin is going up, then you want to be into GBTC almost regardless of the premium. But when Bitcoin is going down, that does not mean you can't make significant dollars by playing the spread or the premium of GBTC over or under Bitcoin prices. So as Tony was saying, that's a different way of trading. It is arbitrage. It's playing the spread. It's playing the basis, but it's knowable, and you can do it. The important point that Leah made, though, was if you've got a retirement account, and if you don't, I'm not sure why you're even listening to all of these investment or speculative types of investments, because you've made the biggest mistake you could possibly make by not funding fully 100% as much as you can retirement accounts. And if you have done that, then that means that all of that money grows all of the dividends, all of the interest, all the short-term capital gains, all the long-term capital gains, and you don't pay taxes on it. So the perfect investment for a retirement account is GBTC. Why? It can move 1,000% in a year, which it did last year. You can get in and out of it 5 times a day if you want to. And the cost is basically zero from a tax point of view. And you can hold all of those gains for years and years and years, and all of that compounds. And to me, that completely supersedes any additional cost involved, such as the 2% fee, because of that tax side of it. And you cannot do that in crypto except with GBTC.
Now, Tyler, would you ever short GBTC?
Sure, but
no,
not in client, not in client accounts.
No, you can't. You can't. It's not shortable.
It is, but not in a retirement account.
That's why. Okay, I was in a retirement account. Actually, also in a retirement account, I couldn't. I tried putting in my order today just to see if I could. I actually couldn't. I requested permission from my broker to allow me to trade pink sheets. Let's see if that comes through. But right now, I'm actually, I can't even buy it. I need special permission.
Yeah, a number of smaller brokerage firms or electronic or interactive type of firms don't allow it, but a bunch of them do. E-Trade, Fidelity, you can buy it. Schwab, you can buy it in retirement accounts. But in one of those cases, you did have to sign a piece of paper saying that I understand that there's risk, and then they let you do it.
Right, but that risk isn't specific to GBTC. It's specific to pink sheets, aka penny stocks.
Exactly. In this case, though, you've got a $10 stock.
Right.
A lot of times on the pink sheets or the penny stocks, the limit is $5, and if it's above $5, you don't have to sign anything.
Tone, that's why you don't invest with Jordan Balfour. But moving forward, all right, gentlemen, I think the show is going to end in 7 minutes. So final thoughts. I will start with you, Tone, given both you guys often get questions about GBTC in the live chat, myriad of different questions, but just final thoughts that everybody should know, Tone.
Yeah, no, I just wanted to, because people have been asking about the technicals on when Tyler and I talk about there's so much more to trading than picking the right direction. There's just so much more. Like picking the direction is maybe 10 or 20% of trading. Maybe not even that. Like you can guess direction. Anybody can guess direction. There's so much more to trading. And since so many people are asking about GBTC, we wanted to do the show to give you some, insider information on what a professional trader trading GBTC would be looking at. And I wanted to highlight the fact that it's not even easy knowing what the right premium of GBTC over Bitcoin is, because every single day, this multiple changes. It changes every single day because of the 2% annual fee. So looking at this chart in 2 years, assuming the SEC is not going to allow an ETF, this multiple could be like 1,040 shares. And that's going to be drastically different. So if you are going to trade the premium, you have to get the formula right of what that premium is. And I wanted to make sure that's out there on video for you guys, because this is an educational channel.
All right, Ty, last thoughts?
Terrific. We started with Bitcoin, and we talked about, I find this very interesting myself, that Tone and I have basically the same technical understanding of where we think Bitcoin is going. It might be right, it might be wrong, but we're very similar in terms of our targets. I'm a little more bearish than he is, but other than that, but Tone holds all of his Bitcoin and I hold none. given the same outlook technically. And that's an important distinction. There's good reasons for both of us to do what we do with that technical knowledge. So again, I go back to my principle, which is don't tell me what to buy Bitcoin. Don't tell me to buy Bitcoin. Tell me when to buy it. And if you can't tell me that, I'll figure it out for myself if I want to buy this thing. I'm not going to buy it because of someone telling me it's a great investment, or because the fundamentals look fabulous, or theoretically it could do something. I want to know exactly when the risk is the lowest and the profitability potential is the highest. And then I will enter it. Whatever it is, if it's gold, if it's the US stock market, if it's the British pound, I don't care. What I do care about is I don't want to put money into something and then wait a year or 2 years or 3 years while it goes against me before I take that money out that could have been better employed somewhere else. Tone is doing a completely different thing where he's using the Bitcoin that he has to pay for fiat bills. And so he sells it when it's high enough to pay off his bills, but he knows he believes he knows the way I believe I know where Bitcoin is going eventually, not down, but up, way up. I wouldn't be in it if I didn't think that. And I do think that. I believe that fundamentally we are going to go much, much higher, simply not from this level. So it's the when part of the question that's important to me. The GBTC discussion, I think, is very important at a lot of levels. All the ones that Tone talked about, all the ones I talked about, but particularly because of this window that you have in ERISA accounts, which are employee retirement accounts under the IRS rules and under the Department of Labor. And it's the only way you can do it. So if you love crypto and you love Bitcoin, it should all be going into a retirement account until you fill that up. And then you start playing games on the outside and worrying about the taxes and all the other stuff with it.
Thanks, Tyler. All right, Tone, what do you think? 2 minutes to go. Should we end it?
Yeah, I think we're good. I think we should end it. Hey, good show, Ty. And Leah, thank you so much for hosting. And we'll see you guys on the next one.
Yeah, especially good luck trading on GBTC. All right, everybody, have a great day.
Bye-bye.